Thanks for having me for the event. My name is Andy Lian from Singapore. I'm the advisory board member to Hyundai DAC. Um, Most recently, I'm also being appointed as the chief digital advisor for the Mongolian Productivity Center. So my previous um, work also involved around government, where I give advice to different countries, different companies as well. I was also the only blockchain advisor for the Asia Productivity Organization, an intergovernmental organization. And of course, people know me in the space as an investor, as a book author as well. So during this COVID period, especially, I have embarked on a lot of new things. One of which is that I work a lot closer with governments, you know, to let them understand more about the regulatory framework around cryptocurrency and especially for DeFi. So my topic for today would revolve around um, and helping people to understand DeFi and how to build a regulatory framework around it. So we all know, we are all in this industry. We know that the DeFi industry has been booming. It has grown a lot. According to CoinGecko, the industry has reached 100 billion capitalization and over 1 million users. If you have imagined, it has grown so much, in the last year, and it has grown a lot, and it will continue to grow. I will not talk about the general things about DeFi, but I would love to give an overview. So the decentralized governance of a lot of DeFi services poses significant operational challenges, such as management of the crypto key, um, the whole voting structure, which are not well understood by a lot of people, and the kind of financial risk and management compliance that is needed to put in order for this whole um, uh, process to work. So in addition, DeFi is also new, so new that it is ever changing. The structure is changing. New schemes are coming up on maybe on a daily basis. So there are vulnerabilities and systematic risk associated with DeFi projects, and that may differ a lot from the traditional finance. So to address some of these DeFi risks, regulators especially must map their risk on a metric of public policy objective, including investor protection, market integrity, financial crime prevention. As with any new market classification, issues will be very challenging. So the regulatory category under different statutory and administration um, might might need to change because they were designed with the centralized financial services in mind. So, having said so, I would start off with the challenges, from DeFi. Some progress, that we have moved, since 2020, is that maybe in 2020 we are looking at the value of the DeFi token, right? When we talk about value, we will talk about, that would there be any form of value for DeFi token? You know, other challenges that we will see, especially right, before this conference, is that can DeFi token survive through a bearish market? Can it survive through a financial crisis? From the crypto space. And the last thing that we have in mind is, can it survive the global crisis? If it's coming, right? There are a lot of improvements in DeFi. We know that it started off as a as a common term that we use. Then it is a lot popular in the Ethereum space, and then it goes to BSC, which is the Binance Smart Chain, and then Heco, which is from Huobi, and then we see multi chains as well, on DeFi. So the whole industry is maturing, very much maturing. So the challenges that I've said before are there. Then there are more challenges ahead. And of course, as we move along, we realize that there are more potential. It will be unlocked. Liquidity was one thing that we talk about a lot when we talk about DeFi. With the LP, with the liquidity pool. It has changed a lot. And when we talk about DeFi, we also talk about DACs. So there are a lot more work needed to be done, and it's a lot more complex than we think. There are a lot of education needed to the retail investors, professional investors, accredited investors, institutions, and also government. So that was the reason why I choose this topic to share, because of my experience with the government and how the government are actually looking at DeFi as a whole, or a decentralized network as a whole. All right, so there's a lot of education needed for this. The term that were being used are not understood by many. When you tell people, hey, why can't I sell my tokens? They say, oh, my slippage is set too low. Most people will not understand. And if you look deeper into the space, there are also possible smart contracts traps. There are hacks. There are also some rug pull that you can see very often. To me, DeFi is one of the clearest example of the code of law. Wherein law represents a set of rules that are written and enforced through immutable codes. The smart contract algorithm is enforced with the necessary constructs and terms of use to conduct transactions between two parties. However, software system can malfunction due to a huge variety of factors, from human being, to possible bad codings and so forth. So all these things are things that we need to understand, in DeFi. Even as of today, some of my friends, or even my folks in the government sector, would say that DeFi is not exactly transparent. Many of the projects hide behind cartoon characters or memes and so forth, and the AYP are often overpromised, and it's not like what they see on the website. And of course, lastly, there's also a lack of KYC. I've said all these things before, talking about the possible solution, to DeFi, or to regulate DeFi, because all these things are all the very much possible problems that are already there. The problem of lack of KYC, for example, is one major problem. And if you compare now and 1 year ago, the DeFi network is very much ready for businessmen and entrepreneurs. We evolved from pure, simple AMM to PMM. We have platforms like, for example, Doodoo, for example, that provide one-click tokenization services and so forth. You see IDOs, you see the different kind of bridges, protocol, oracle that are happening in the space. So you look at it this way. This means that building up a DeFi project is a lot easier. Is a lot easier, for projects to be started, and regulators got to catch up on all these processes, and not be like in 2017, where they waited too long to speak out about the clearly speculative bubble, around some of these bogus blockchain ICOs. So coming back to where I want to bring everyone towards, is, I think a fully public and decentralized blockchain is controlled or operated by a community of miners, nodes, and users. The absence of a central entity means that it is difficult to attribute responsibility to any one person on the network, and Enforcing smart contracts, binding legal obligations are also not easy. So a suitable developed smart contract network can potentially help to avoid possible disputes, by itself, without any recourse to legal proceedings. However, this does not prelude, a court challenge to the outcome of the smart contract, and it remains to be seen how court will deal with this. Given the difficulty in identifying a single person to regulate for DeFi application built on a fully public and decentralized blockchain, we could see the development of innovative supervisory technology, which then harness this blockchain and smart contract to exercise better functions without relying too much on the intermediaries or institutions. Authorities may also find it useful to have a voluntary regulation or registration system for DeFi applications. Applications or applicants can require to have a proper entity and a designated person or groups of people, such as an administrator or a director who is appointed to carry out the representative and other duties, in the administration of the corporate entity. Some countries have also implemented something very similar to regulate blockchain, smart contracts, and also DAO. This approach may encourage participants in the DeFi industry to establish joint ventures or other cooperative model to assume the governance and liability of operating the platform. This also serves to provide some sort of guidance and protection to DeFi application users or the investors. I have two other solution angle. One would be, we could also look at the use of DeFi as part of a risk framework. It can be imagined that financial intermediaries are applying enhanced due diligence for transactions or clients linked to DeFi. This could be one way. In any case, it requires a deeper understanding from the technology side, even if it is sometimes a lot to ask to fully understand a business model. In case of a person, for example, using DeFi with his custodial wallet, the provider is subject to AML supervision and by law needs to ensure that he is aware of the transaction and risk connected to this service. Some people might tell me that, hey, Andy, this is a bit too much to ask for. But I think from an AML perspective and also a responsibility perspective, this is an angle where the government are actually going into. If you look at the more recent reports, China is changing the landscape, for how cryptocurrency is going to be dealt with. All right, Chinese accounts, some of them are also being blocked. They can't use it anymore. They can't transact. Everything by law got to do it. Of course, this has all along been the case. But it has not been properly enforced. So you will see such things happening in the space. And what I've mentioned about the DeFi as a part of this risk framework, that will happen. The second thing that I want to bring up will be the use of DeFi with trusted financial intermediaries. This is very similar to what we see right now in the traditional space. However, clients and investors do not need to be entirely unprotected. Experience in traditional finance shows that one can satisfy the clients and investors' justified need for protection in different ways. one of which is to regulate professional service providers. This approach um, will be in contrast to purely regulate financial products, regulates those with both influence over the system and great opportunities to digress from legal and moral path. As professional service provider can also be expected to be linked with regulatory requirements. They have to abide. The regulations will also yield better results as they will follow with more know-how. In addition, the objectives of regulation, and in particular the protection of client and investors, can be ensured more effectively, efficiently with the regulating of DeFi products itself. So now it works both ways. All right, it's a responsibility for both the financial services provider and also for the end user. So it is also preferable, from a systematic point of view, regulating the professional service provider with their greater influence, greater power, and create a standard of services, SOP, that can help to police the entire system and have it more effective than regulating individuals only, or regulating DeFi products. So such a model is very important because it sets the right kind of mindset and the right kind of framework for DeFi to move ahead. It also allows the governments especially to understand more about DeFi, because when I talk to different government, about how DeFi is going to work, they are very often given the very nasty side of things about DeFi. All right. Again, maybe their local advisors or local consultants gave them that perspective, or perhaps they read it from the newspaper. But if you again look at it properly, if you do understand how the whole DeFi structure is being panned out, you will then use the most appropriate way to make sure that you have regulations or oversight on some of these possible framework that you have structured it. DeFi is not necessarily bad. It is also not necessarily too good to be true. So there will be a lot of education process, to the government for them to understand and regulate the space properly, or to put up some form of barrier for people to enter into the DeFi market. There are rumors that some of the more developed countries will stop investors, normal retail investors, to go into an investment or into a crypto trading platform, if they do not understand finance, if they do not have any financial background. There are rumors that governments will ban it, will stop it. You have to be accredited investors in order to be trading derivatives and so forth. So these are some of the things that will happen. But before that, government must try to understand, the whole industry. Normal users who are looking at the high price or the speculative price and so forth, they have to also understand how DeFi work, right? It is not as simple as just putting in money. There are a lot of different steps to how to put your money into a DeFi space. There are also numerous steps for you to get out from a deal, or to lower your risk, or to get a better position. So all these things require skill, and again, both the government side and also the user side must sit down to work together. The potential for fraud and excessive risk always exist in financial markets. So DeFi, crypto, they are part of the whole financial market. So regulators have the opportunity early right now you know, to shape expectations by working with responsible entities while taking aggressive enforcement against some of the bad actors. This has to be done, and this will be done by the government. And I'm sharing this more from a professional standpoint, you know, as an advisor to different companies, to government, and also to MAS regulated fund, you know. So we have to make sure that all these things are in place, and if possible, for all the crypto practitioner, please educate and share the right knowledge with your stakeholders, you know, or with the with your friends, or with the public, you know. Please educate them so that they can avoid risk. This whole process will also help everybody, you know, understand DeFi a lot better. So thank you for your time, everyone, and please stay safe. Thank you so much.